Hello, this is Ernest Osias, Director of Market Analytics with Woodall Risk Management. Thank you for joining us for our weekly technical overview of the grain markets. Before we begin, a brief moment to look at our market disclosure. This is a solicitation, and there is substantial risk of loss in trading futures and futures options. Past performance is not necessarily indicative of future results. Thanks once again for joining us for our weekly installment of the Technical Market Overview. We'll go ahead and begin. The last couple of days have been quite eventful for the markets. We see support come in at 375 as anticipated for July corn. What we did not anticipate is the strength at which the market would actually have bounced off of support. Now we're looking at the market making a potential rally up against 394 and potentially reaching as high as 400 to 403. Now that the market has come back up off of support, the movement to the upside that we're looking for is actually occurring a little bit faster than anticipated, but nonetheless, the market continues to make its movement to the upside going into the coming months. We've also shared about the value of our 1x1 angle. And this is where exactly the market came in and found fantastic support as the market tested this area here, just above our range in this market here where we find also very good support. Overhead, we mentioned the range of about 400 to 402 being potential resistance for the market to reach up to. And upon reaching this area, this is where we could see a possible test where the market could then come back down, retest previous levels here. But again, we're looking at the market to make a progressively nice and gradual move to the upside. The December corn contract shows us a similar price action where somewhere in the neighborhood of 406 to 410 is a very good price objective where we look to find good resistance, at which point the market could then pause, make its way back down to potential support up against our timing angle, which would bring it down to about 400 or maybe 398 or so. Last week, we shared how the key price objective for the July soybean contract stood at 1024. It is at this exact same level that the market could not get through, at which point we saw a surprise reversal based off of some rumors from an executive order from the White House for E15 waivers that did not or has yet to come to fruition, caused a massive rally yesterday, and we saw a bit of follow through today, even after the White House denied that such an executive order was going to be signed. The strength that we are now seeing in soybeans suggests that we're going to test somewhere in the neighborhood of 1080. And if we're able to get beyond 1080, then a move to up to about 1113 is possible. But for now, we believe 1080 should stop this market if it's even able to get to this range, at which point the market should turn back down. And the first area that we would look for key support is 1047. And below 1047, we should see a breakdown then that goes through that 1024 mark and looks to test the 1008 number. The action we saw is once again very consistent with testing our 1x1 angle to the downside. And again, we warn that once the market comes in, it likes to reverse itself up against the 1x1 angles. And once it's able to breach, then we can see follow through to the next major angle. The market has turned up from that area that we shared. We're up against our next key angle overhead. And above this angle here is where we would test, which would be a retest of that 1080 area that we talked about before. But once again, it needs to get through this area. And so tomorrow's price action, whether we have follow through, is going to be very key. The November contract appears to be in a stronger position than the July contract and is very well poised if it continues to break out to the upside to test about 1060. And so if this market breaks above these previous highs in the coming days, a move up to 1060 is quite possible, but it will meet very good resistance here in the event that it makes a move up into that area. We have a downside 1x1 angle that it needs to get through. That's going to be very important near 1050. And upon getting through 1050, then that window between 1060 and 1068 is going to be its important level where the market should find very good resistance and reverse back down, consolidating some and perhaps turning with great strength to the downside. Immediate overhead resistance currently sits at 1044. So this is going to be a very key level for this week. If the market's able to close above 1044 this week, then we can look at potentially touching 1060 next week. But as long as we stay below 1044 this week, we anticipate continued weakness, and the move that we're seeing to the upside should come to a halt, and at which point the market should turn back down. July week was right on point, finding support just above 450, right at about 453 for the week. And as we can see, the market came in, found great support, and has turned right back up again, and now is right back above our 180-degree angle of 462. The market is up against resistance, but the way in which the market is moving right now suggests that we could very well see a retest of that 483 3/4. And above that number, the market can, in fact, make an advance that looks to test 492 to 498 or so, at which point we should see very good resistance. Making it up to about 506 is not realistic, but the market has done crazier things, and we do like the way in which the market is moving here. We thought that the touch that it made up at 484 recently was perhaps the final high, but the market has found a way to regain some strength and is turning its way back up again. This first test of 484 is going to be key, and above 484, once again, look for a test of about 491 to 500 for a potential price target. The price action for December wheat is similar in nature, and as we can see, upside targets look to be somewhere in the neighborhood of 525 to 530 if the market's able to get up above resistance that we have at about 508. Right above 508, we have the 270-degree mark at 519. And so above these areas here, the market continues to look pretty strong as it's been making its move. It's made a series of higher highs and higher lows. And so as we can see, the market's coming in. Very good resistance first initially came in near that 519, and we look to retest that level in short order. In closing, June crude oil continues to stay inside of the same trading range in which it's been in. We are approaching a critical timeline where the market looks to potentially break out to the downside. Upon breaking outside of this critical range, will give us indication as to the direction that it wants to go in. For now, we continue to believe that the market wants to break to the downside, and upon closing below 53, we should see a very violent move to the downside for this contract. Thank you so much for joining us for our weekly market update. Look forward to touching base with you again next week.